Okay, good morning, folks, and welcome to Swing Trading Today. It is 5 a.m. Eastern Standard Time, July the 28th. This month, is it 31 days? 30 days past September, April, June? How many days? 31. Okay, good. Is it 31 days? 30
So
days
only.
past September,
Why am I
April,
hearing
June?
myself
How many
here?
days? 31. Okay, good. Is it 31 days? 30
So
days
only.
past September,
Why am I
April,
hearing
June?
myself
How many
here?
days? 31. Okay, good.
This
Is
is
it
really
31
weird
days?
today.
30
So
days
only.
past September,
Why am I
April,
hearing
June?
myself
How
here?
many Bear
Days?
with me one 31. second, folks. Okay, good.
This
Is
is
it
really
31
weird
days? 30
today. So
days past
only.
September,
Why am I
April,
hearing
June?
myself
How
here?
many? Bear with me one 31. Second, folks. Okay, good.
That was weird. Okay. Um. Good morning again.
All right. So, what we're going to talk about today are the pre-market activities in the futures market. We'll talk about some symbols that have been submitted for us to review on video, and if we have some time, those symbols come through from members, and if we have some time, we'll take some requests from the audience, and we'll go to about 5:30 this morning Eastern time. Good morning, RL NY Jets. Good morning. I'm glad it made you laugh. I was freaking out. I have so many windows open. Okay, I think the big story today is I spoke about, or I titled this commentary, Swing Trading Today, Sell Gold and Silver, question mark. And we did go short yesterday of the gold miners. At least as a hedge, because we got along with the gold miners still. Oliver, good morning. So we're going to scroll through some commodities. I'm really liking copper here. Nice consolidation. And you may be saying, where's the growth? Well, you could argue that there's growth over in Vietnam. There's growth over in Malaysia. There's growth over in India. But it really doesn't matter. Most commodities are priced in the U.S. dollar. The U.S. dollar is weak. It's up today. We'll go to that chart in a moment. But it will be getting weaker. And what that does is it takes more dollars to buy whatever you buy copper in, pounds, ounces, sheets, whatever, rolls. And that's the bottom line. You don't necessarily need growth. When it really gets crazy is when you have growth and a declining U.S. dollar, the velocity of money is ripping through the ceiling, and that is when you enter hyperinflation. So copper, 4-hour basis. These will all be 4-hour charts. I may flip back and forth. As a matter of fact, I want to take a look at copper on a weekly basis. Yeah, you can see very tight consolidation. We're in our third week. You want to argue fourth week? Fine. At least 3 weeks. Tommy, good morning. All right, what else do we have here? We have a lot. I think the big one this morning, anyway, actually two, is the dollar. We spoke about this last night on Market Wrap with members. I said, listen, the reason why we went short of the gold miners is I think that we're going to pop up higher on the U.S. dollar. And one of those indications was simply that we stopped going down on a 4-hour basis. Tommy, I'm already. I think you're already sold, right? Yeah, it's a corrective pullback. Silver's going a lot higher. Silver's still very cheap, but you can see the dollar is coming off the lows, and then when you add in the fact that where are bonds, and this is what I've really been warning about, and I want to go to take a look at a this chart here is very powerful. It's an inverted head and shoulders setup. bullish for bonds, bearish for yields. But I warned, beware. Watch for pullback here. And I even drew this tripwire, and we plunged through it. And overnight, we continued to sell off. I said, if the dollar rallies, yields rise, you're going to see a pullback in gold, silver. And what happened overnight? They rallied into the Asian Open. Here's silver. We'll begin with it. Hammered. We're down nearly 3.5%. We were down lower at one point. But to think that this is going to last any extended period of time is a bit ridiculous. What we need to be looking at right now is the fact that the pullback that we get is probably going to be brief and it's going to be fleeting. So we're going to be taking advantage of it. Perhaps not today, but I do not plan on staying short of the gold miners very long. We shorted silver last week, in, out. We did well with it. This is no time at current because we're not at extreme overbought levels yet. Meaning we don't have an unsustainable uptrend. For all I know, silver will close positive today. Same thing for gold. Is it probable? No. Can it happen? Yes. Gold. We're down about a 0.25 percentage point. But the big story is that look at where we were. We hit an overnight high of 1974.7. This is a huge pullback. And at one point in time, we came very close to, what was the low here? For all intents and purposes, we retested 1900. You could see there were bids out there taking it off the high. This is the market sending a signal. There are buyers below. Before I go to equities, let's take a look at other commodities. We'll stick with the metals for a moment. Palladium is down about a percentage point. It looks as though it's probably going to go lower. Let's go to platinum. Platinum took it on the chin overnight, 0.5 percentage point. It was lower, bounced back. I mean, you can't ignore this price action. You can see platinum got a little bit too big for its britches. It got ahead of itself, as did gold, as did silver. But that doesn't mean it's not going to last, meaning the longer-term bull run. Corn, it's taking it on the chin. I was going to buy the DBA yesterday, which is the Ag ETF. I guess it's best that I didn't. Soybeans getting hit really hard, 1.5%. Wheat up. This becomes support. What else do we have here? Let's do energy, nat gas, and oil. Last night we were talking about nat gas on market wrap. Not nat gas, energy on market wrap. And how it's poised for a breakout. And you could see nat gas this morning flirting with a a breakout here, but not quite yet. Light sweet crude, it is down. All right. So we're probably going to settle into a trading range on these commodities, and then it will be time to step in. Now, Bitcoin, I was asked last night by one of our members about whether or not it was time. It was during this bar here, and we had already come off the highs of the session. And I replied back, no, because what you're looking at on Bitcoin, for again, 4-hour chart, is an RSI, which was at that point in time above 91. So my mentoring was, no, don't do it now. Wait for the reaction. It's coming. And I wouldn't be the least bit surprised to see Bitcoin. Remember, for the longest time, this was resistance right down here, 10,000. We haven't retested it yet. So I'm not going to be the least bit surprised to see a retrace all the way back down to 10,000 during this consolidation phase of the commodity spectrum. And not that they trade in tandem, but what they do trade in tandem with is inflation. And if the dollar is rallying and yields are rallying, that is viewed as a negative for inflation. But don't get me wrong. We are way behind the curve, way behind the curve. If they raise yields up to 1% right now, it's too late. Inflation's on its way. There's no stopping this locomotive at 1% yields. So we'd have to go real far, real fast to stave off inflation. So any pullback here is an opportunity as long as we hold 10,000. Let's take a look at equities. Now, when I went to bed last night, equities were firmly up. Now they're, for all intents and purposes, flat. So we did do some buying yesterday. Along with some shorting. And again, that short is of the gold miners. As a matter of fact, I'm out of curiosity. I just want to see what's going on there. We went long of Dust, which is a leveraged bear ETF, not for the faint of heart. And we're popping in the pre-market, but this could easily fade by the time I get a chance to dump it. So fingers crossed, we're able to scalp a profit by the time pre-market trading opens up. Because again, I'm not expecting a crash in the gold miners. I'm not expecting a crash in gold. We're just expecting a brief correction. What else do I want to take a look at? NASDAQ 100. Flat. We are seeing higher lows on RSI, higher lows on price. This bar just opened up at 5 a.m. 15 minutes ago, and we're hugging support. It looks like a light volume session. Not much happening here at all this morning. But I will say this. What concerns me about the Qs, which have been the market leadership, is that these Stokes here, they are declining, and now we're firmly down below the 50 mark. So I have a saying, and that saying is, rallies tend to fade. When you have your Stokes, if you're wondering how you're supposed to use these things, it's not just for overbought, oversold readings. People lose their shirt using this for overbought, oversold. What you really use them for is a momentum indicator. And the momentum is waning. Now, while yes, and I was surprised to see this yesterday, we did close near the highs of the day. We did not fade. I'm worried about a pop higher today and then a fade. So this needs to get corrected. Either we continue lower and we fade and put in a lower high and take out lower lows, or we begin to flatten out on these Stokes and begin to hook back up. RSI is already doing that. But the question is this a lower high? Or do we pull back, double bottom setup? Or do we have a V-shaped recovery? I don't know. I'm not that smart. All I'm doing is taking note of the signals that the market's sending us and saying, okay, let's position accordingly. So that is my concern about at least the Qs anyway. And if the Qs go, the S&P is probably going to go as well. I'm not predicting it. Eventually I'll predict it, and I'll be right. I love these guys. They say the market's going to crash day in, day out, and then ultimately they're right. And they say, oh, I called it. I don't know if that's accurate. Russell 2000. Okay, the Russell had a really good day yesterday. But keep in mind, in a stagflationary environment, what does well? Growth. And not all small caps are growing. You want best of breed, particularly in technology, growth, because you need to outpace the corrosive effects of inflation on the U.S. dollar. You also want to be long of utilities, gold, silver, commodities across the board. Just buy commodities. Because most of them priced in U.S. dollars, and all will catch a bid. I know I'm leaving out another sector that does well. I forgot. I'll remember in a minute. It's a little bit too early. All right. Emerging markets. I just saw this. Emerging markets. Sorry about that. You want to get out of U.S. dollars. You want to go into emerging markets. Thank God I just saw this. This was not rehearsed. You would probably think it was. It was not rehearsed. Emerging markets. You want to get out of U.S. dollars. Why? Because emerging market debt is denominated in U.S. dollars. When the U.S. dollar goes down, it's like a tax cut for emerging markets. And most emerging markets, what do they produce? Commodities. What's doing well? Commodities. So they're making money. They're able to service their debt better. Longer term, you need to get out of U.S. dollars, long story short. Let's take some requests. I don't think I have many this morning. I'm looking at my list here. I don't have many. Beyond Meat. Okay, we'll do Beyond Meat. All right, for this segment, we're going to be using TrendSpider. They're sponsoring this segment of Swing Trading Today. 35% discount code below, folks. If you like automated technical analysis, as I do, I use 3 charting software. 3 pieces of charting software. I guess that's right. Thinkorswim, intraday charting, stockcharts.com for more indices. They have far more detailed indices than what does TrendSpider have, but TrendSpider has automated technical analysis. It's just really powerful tool. So I encourage you. They have raindrop charts. Raindrop charts is a mixture of VWAP, volume weighted moving average, along with candlestick charting, all in one. And you're only going to get it with them. So again, 35% discount code below. If you're interested, don't pay their retail price. And mine is the best deal you're going to get on the internet because I do so much business with them. Because I have, with my silver and gold level memberships, you get it for free. All right. Beyond Meat monthly chart. I don't think we're going to have any, as a matter of fact, I already had this triggered here. We're not going to have any automated trend lines yet because there's not enough data. But you could simply just do this. You can see I've already done it in the past. I mean, big breakout. Now we're pulling back some. We're just off the lows of the month. Weekly chart. Now here's where it gets interesting. Not so much the monthly chart. The weekly chart is very, very interesting. Boom. What we're doing is we're forming a wedge formation. And here's your upper band of resistance at around, this is going to change because it's declining ceiling at let's call it 129 right now, but it's declining, so that could change. 114.80 is the lower band of support, perhaps even last week's lows, assuming that we don't take out that low. If we take out 119.94, we're going down to 114.80. So what I'm going to do here is I'm going to create an alert. All right, second preferred entry point, not my favorite, but perhaps a good spot to nibble at. My ideal support level is here. And I'm not big into averaging down on stocks that are not extreme overbought or extreme oversold. So I would enter the trade at this support level, the support level number 2, if the health of the overall market is strong, if it's behaving well. If it's not, I'm not going to pull the trigger because I don't want to average down. All right, this is the one I really like. That gives me a better risk-reward entry point. Now, nibble at one or both of these points, then I would be a bit more aggressive on a breakout and retest. Of resistance. Okay. And we'll keep this active again for 5 days. And we're good to go. Set it and forget it. I'm not going to think about Beyond Meat until those fire off. Yeah, I can check VIX, Tommy. Yeah, I forgot to go over that. Thank you for that. The VIX caught a whopping yesterday. Now, this is the August contract. The chart that I use, which is stockcharts.com, had the VIX down below 25. I'm not sure what contract they're referencing, but at current, we're up slightly, which is not good to see because we were up earlier on the S&P 500. So that gives me pause. Let's see whether or not we're still up on the S&Ps. No, now we're negative. All right, so the VIX pulling back now makes sense. Or the VIX rallying, I should say, now makes sense. Sorry about that. Still on my first cup of coffee. All right, so VIX up. S&P is now negative, flat for the most part. You bet, Tommy. Any other symbols, or are we good for today? Just follow up while I wait for a reply, if any. Gold. Finding support at 1926. Buy the dip on what, Oliver? Gold and silver, or? I wait and see how things play out. Excuse me. I'd like to see if the dollar has legs, and it probably doesn't. I think ultimately, given the damage that's been done to the dollar, we're going to need to pull back, do a retest of at least 93.50 on the Dixie. We're still up on the session, but we're giving back some ground already. I'm going to be out of that short position probably by 7 a.m. Eastern Time. And it's really just what the goal was, to scalp a trade. That's it. Again, no bet that we were going to see a crash in gold or silver. Where are my bonds? They continue to regain some momentum. So that means that yields are at current flat. But I think this is a shot across the bow at some professional gold and silver traders. I think the amateur guys that are seeing new price highs are going to view today's price action as an opportunity to buy, and many times they're right. NGD. New gold. Okay. All right. So thus far in the month, I mean, very orderly rally here. We're not overbought. And when I say overbought, I mean relative to the third standard deviation Bollinger Band. Stokes higher lows, exactly what you'd expect to see in a gold miner. We have a breakout on RSI. So the long-term view is that we're going higher. We have broken out above. Right, let me just validate this. Yes, we have broken out above the pivot point, which is at 1.54 rounded up. You know, we only have a few trading days left to go. Gold is coming under some pressure. I think the play here, subject to change when I check the weekly and daily chart, but my first hunch is that what you'd want to see going into August is a pullback and a retest of 1.54. That's a great risk-reward entry point because you keep your stop right below. With that, what should be a strong support level, because it was resistance back here in July of last year, and it was resistance back in June. It should now, if it's a healthy stock, and this is a rally that's for real, then it should be a support level which holds now and acts as support. Weekly chart. Does that help if they are a Canadian company with a weakening U.S. dollar? Yeah, because the currency conversion acts in their favor. So the Canadian dollar is weaker than the U.S. dollar. The U.S. dollar is weakening. So yeah, it works in their favor. Especially when their input costs, because gold miners are capital intensive, right? So they need to buy energy. So if they're buying energy now, that's the only problem, is that energy prices are moving up higher, but the Canadian dollar should be moving higher relative to the U.S. dollar. So that's an offset. So that's basically that they are self-hedging themselves. So that currency risk is not a problem because the Canadian dollar is rising, keeping up with inflation of energy. So that should keep their input costs relatively managed. Now, if it was a U.S. company, that would be a different story. I didn't do the weekly chart. So weekly chart, we have a bit of resistance above. And that's at around 1.79. We're off the highs of the week, so a little bit of a fade. No big deal. So we broke out. And this is exactly what you want to see. We broke out yesterday. Intraday pullback. Did a retest. We may bounce around here a brief while longer. I think on that retest, if you wanted to nibble, fine. But I would just be careful. I'd be watching the U.S. dollar. I'd be watching yields. If the dollar's rallying, if yields are rallying, especially on the 10-year, then you may want to show a little bit more discipline, a little bit more patience. Wait for this support level. This is our primary entry point right here, 1.54. Wait for that support level to get hit. And you might have to just close your eyes and press the buy button because you may just get a flash pullback to that support level on a rallying dollar, rallying yield. MU. I hear that the great whites are back. You mean around Long Island? Or am I missing something? You guys busting my chops. Yeah, we break down to new lows, Tommy. We're going to see an 88. 88 makes sense. We're definitely going down into the 80s, though. Micron. We're in a very tight. It may take. I didn't want to do that. I didn't hear about that. I live here, but then again, I don't check local news all that often. I'm more of a macro guy. You got it, RL. All right, so I'm going to leave it off with PayPal because I'm a little bit over. Monthly chart of Micron. The higher level view here is that we're in a ever tightening consolidation on Micron. We're continuing to stair step higher, respecting this lower band of support. 48.13 is nice support. We're in the middle of a trading range. Would I put on a trade here? I don't know yet. I have to drill down further on the charts. We have a breakout monthly basis on RSI. Doji star formation on a monthly basis, sign of indecision. Triangle formation, very close to a breakout here. The high of the week was 51.71. The low 50.49. We closed right at resistance yesterday. I think you're better off waiting for the breakout. And you can see that there's a lot of topping action. Like last week, big rip. They faded it. Prior weeks, a lot of topping action in here. This reminds me of an AMD chart. We had for several months a lot of topping action, and then earnings came out, and they just ripped through resistance like a hot knife through butter. Higher lows on Stokes. RSI firming up very, very nicely. This is a tough one. I don't know if I would buy here. Have they reported earnings yet? Triangle formation. I would do one of two things here. Using the daily chart, watch for a breakout. And or I don't care if it breaks through. It's not as short either way. Watch for a pullback and a retest of support. What do I do? That'll be my game plan. Ideally, you get a pullback, retest the support, scratch the itch, enter, use a stop loss right below. If it doesn't fail, add to it on a breakout above this upper band of resistance. That's my play. Let's just check out the raindrop chart. See how it closed yesterday. Nice day. This, what I call a pregnant right side of the candlestick, is the afternoon action. What you want to see is a big fat belly at the top of the candlestick. That implies you had buyers into the close. Buyers into the close, not sellers. And they closed it strong yesterday. There's a good chance this breaks out today, assuming that the market holds up. All right, we'll leave off with all right, Oliver, since you're a regular, we'll do yours as well. We're going to leave off with PayPal and FSM, and I got to go. PayPal, PL. Before I leave the raindrop charts, I want to check out the daily chart. A good close yesterday. Friday as well. All right, we'll come back to the daily chart because I have some comments. Monthly breakout and a retest. I mean, it's a monster. Monthly chart is bullish. Weekly chart is bullish. For the most part, the daily chart is consistent with the weekly chart. We rallied. We took a pause. Now we're showing signs of strength. I think on a new weekly high, these shares can be bought. And I mean a weekly high versus last week's high. $163.60 is support. And again, the weekly chart is a lot like this daily chart. Resistance above. I like support down here. But I think that there's a good chance that we break out as soon as today on PayPal. But again, it all depends upon the market. Nice breakout. Stokes are putting in a higher low, what appears to be a higher low. So it looks like momentum is beginning to change some. But these Stokes, where are they now? Where do they close out? They're back above 50. Okay, good. FSM. It's a monster, no doubt. But you're probably going to get a correction today. As well it should, because you're trading above the third standard deviation Bollinger Band on a monthly basis. Same deal here with the weekly chart. A bit extended, not as extended as the monthly chart. You know, it could certainly move up higher and embarrass me. What I do like is that we're through this volume shelf here. And you can see how these volume bars drop off. That means there's going to be a lot less of a battle to make new highs between traders because you have less overhead supply. So it makes it easier for the shares to press up higher. Daily chart. Nice orderly pullback off of the rally through the third standard deviation Bollinger Band. We held support. I mean, it's a good-looking chart. My only concern, if silver were rallying this morning, I'd say, you know what, it's a good-looking chart. It's probably going up higher. Use a trailing stop-loss order. But I think that you may get a reaction to the downside today. If you can get the shares down here, and silver's extremely volatile. It can happen. If you can get it down to 6.50, 6.43, that's a good entry point. So longer term, the shares look good. Just need to worry about the reaction in silver this morning. I have worn down the letters on my keyboard, so I can't see. I need a new keyboard, long story short. Who I'm thinking right now, you might be saying, why is he typing so fast if he can't see the letters? I took typing in high school because I had a crush on my typing teacher, Miss Jackson, quite the lovely lady. And I did very well with my home row keys because I paid a lot of attention. Okay. That's the play with FSM. How can I turn down a lady? Hey, Kat. All right, last one up is going to be for Kat W. Wayfair. Man, last time we talked about this chart, what a really weird bunch of stories they had going around. Kids and cabinets, and I wonder how that ever worked out. I bet you a bunch of people got fired over there. If I were long here, I'd be looking to make some profits real. We're right at the upper band of a trading range. We'll drill down further to see whether or not there's any fuel left in the tank. But it's come a long way. You know, this is a weekly chart, and if you overlay on top of it monthly resistance, I mean, we're right there. 242 is actually 240. Let's say 244, round it up. Where did we close out yesterday? Roughly about $10 of upside, maybe, if we can get through monthly resistance. I'd be looking to scale out. I would not initiate a new trade here. Too much risk, not enough reward. Would I go shorting it? If it failed to hold this lower band of support and you had the market that was weak, I might. But we need to see a break of support. And, of course, a weakening market. Now, taking a look at a daily chart, the way it closed out yesterday, I'm going to bring up raindrop charts in a second. Yes, Tommy, thanks. Please, folks, hit the like button. Thank God you guys remind me. I'm a horrible YouTuber. We had a bullish reversal bar yesterday after reversing off of support on Friday. So let's bring up the raindrop charts. So it looks like, yeah, it was a good close yesterday. A lot of buying into the close. But just keep in mind, you have 3 resistance levels above. Oh, I can't overlay. Let's bring up the regular candlesticks. Here's a 4-hour chart. Yeah, if the futures hold up, we're probably going to press up higher here. If we blow through 235.97, 242.51, this is one where if we continue higher and I were long, I'd be using a trailing stop loss order. Let the market take me out because you have a lot of resistance levels above. Which one's going to be the successful one, if any? Not quite sure. So that's why I'm saying I would use a trailing stop. Let the market take you out and preserve as much of those gains as possible. And with that, folks, I'm going to say everybody have a profitable trading day. Thanks for joining in. And I will talk to you tomorrow, same time. And again, please smash the like button, subscribe. Trendspire 35% off. Have a great day. Be well.